Deciding how to invest your retirement money can be really stressful, can it? There's so many places to put it, but so many seem risky and complicated. Well, by the end of this video, you'll know the least stressful ways to invest and where you should be putting your money. Now, the first point I want to make is that stress obviously is an internal emotion. It doesn't mean it has to be rational, okay? Stressful, in my opinion, means that there's less scarcity. There's got to be less fear, less greed even. I mean, there's got to be less stressful ways to do it. Stressful in my mind means there's risk, right? High risk or chance of loss can create more stress. So when people tell you, first and foremost, that high risk creates high returns, that is kind of a lie. Now, that might be true, but really if you want to go for the highest risk or chance of losing to get the best returns, the truth is you should be investing in the lottery, in your mega bucks, right? Or your Powerball and that kind of thing. Well, sorry, not Powerball, your lottery ticket like that, right? Those would be the most riskful, if that's even a word, the most risky investments that you could be doing. And they have the biggest returns. You could win billions until the taxes come out, then you make a few million, right? But those are the most stressful and the most risky. So why don't we do those? That's not the way to be doing it. You don't want more stress with your money. You want to live comfortably. Now, let me talk about comfortable, because many people will say, Chris, I don't want to do anything crazy. And then you might say the opposite. No, I'm not a gambler, Chris. No, I'm a conservative investor. Okay, what does that mean? Well, that means I put my money in the stock market. I put my money in mutual funds. I might put my money in the S&P 500 because that's safe. Okay, first and foremost, anything in the stock market is not safe. Okay, there's a lot of risk there and you can lose everything. The likelihood you're gonna lose everything, not necessarily gonna happen, but there's a much higher chance of that happening. We could always have another WorldCom or Enron type of situation where stocks go to nothing and you've lost it all, right? So when people tell me they're a conservative investor, what they're really saying is they're a comfortable saver. Because first and foremost, if you put your money in mutual funds or in the stock market, you're not an investor. Investors like to control risk. They like to get their risk as low as possible while maximizing their returns. They want lower risk, higher returns. They don't believe that high risk creates high returns. They think that's ridiculous. That's what financial companies are trying to teach you, so you take all the risk with your money where they don't have to. By the way, if high risk really created high returns, wouldn't that mean that those financial companies would be taking more risks with their money? Wouldn't that mean they put their own money into the stock market? Well, guess what? If you ever look at those Fidelities and those Merrill Lynches, they're not putting their money in the stock market. They're putting your money in the stock market. Where are they making their money? Not off the stock market. They're making the money off of charging you fees to keep it in the stock market, saying, hey, leave it in there for the long haul. Let it sit there forever. And then someday you could pull it out, but pull out less than the interest. Why? So they keep making more money every year as your balances go up and they can keep pulling off their guaranteed fees, low risk fees to do that. So when you say I'm a conservative investor, what you should really be saying if you're putting your money in the stock market is you're a comfortable saver. You just want to do what the status quo has done. You want to do what the norm of people have done. And guess what? That comes to my point number 2 here, is you need to avoid the stock market, okay? Avoid it. You can't truly live stress-free putting your money in the stock market, because the truth is the stock market is bipolar. It's like that crazy ex-girlfriend that you were dating that you said, hey, man, she's amazing, but whoa, she's crazy. That's the stock market. Well, you know it's bad when a president can send out a tweet and the market drops 2%, you lose 2% of your money. That's a problem. You know, when the feds come out and they say, I'm gonna raise interest rates again, you lose more of your money that day. That's a problem. If you could lose 20% in a year, that's a problem, okay? Avoid it. Avoid the stock market. It's crazy. And the problem is comfortable savers put their money in the stock market because that's what everybody else is doing. Well, do you wanna end up like everybody else? Because I'll tell you, everybody else are not financially free, are they? No, they are not at all. There's zero financial freedom there, okay? You don't find people doing that. You just don't find it. I know, because I was a financial advisor for years, and not just my clients, but other people's clients, people that were financial advisors that worked with clients for decades. When I would inherit those clients after those advisors retired and they died off or quit the business, well, guess what? Those clients were still not financially free after decades of advice. This also includes those that have 401ks. That's my next point, is avoid your 401k. 401ks lock your money into prison. They lock them up. Now, they give you those golden handcuffs. They say it's great because it will give you that teeny little match. And some people think that match is huge. Even if you get a 100% match on X%, here's the problem, is that match does not truly give you a 100% rate of return. I'll prove it. Just go to any kind of calculator website like calculator.net, go to an interest calculator and put with your 401k, say you're putting in $10,000 a year and put 100% rate of return for 20 years and see what you come up with. You're gonna find out you're richer than most of the billionaires in the world. And I can assure you there's not one person with a 401k, just like you and me, right, that's been putting money in $10,000 a year to become richer than Donald Trump. Okay, that just does not happen. That's the problem. You're not getting 100% return. You're getting maybe a couple percent return over time when you get that 100% match. Here's what it costs you though. Those 401ks, not only do they cost you a lot of taxes, but again, you're riding the waves of the market. You can't just pull the money out whenever you feel like when it's left with your employer. The only way to get access to your 401k is either quitting or getting fired. I don't necessarily recommend either. Okay, so it's locked up. And if it's riding the waves of the markets and it happens to be a time when it's going down, do you want to pull your money out then? No. You're gonna wait till it comes back up. And then you might even wait too long and then it starts going down again. And you're like, oh, I gotta hang in a little longer. You ever hear people say you gotta be in it for the long haul? Just hang in for a little longer. Well, how long is the long haul when the market goes down? My dad experienced this. Y2K hit, 2000, stocks started tanking, especially in 2002, not because of Y2K, because the recession was over, but because we found out that companies, stocks, those companies were lying on their books. They started lying about their numbers, and then the whole market tanked 22% that year in 2002. So people were scared to put money in stocks. It didn't matter if the economy was fine. The stocks tanked because of news, because whatever fear and stress is going on out in the world will affect your account balances, creating more stress for you. And then people start pulling their money out and creating more stress for everybody else because then the market just keeps going down. You do not want to be caught up in that little bipolar, crazy train ride, right? Cue Ozzy Osbourne. We're not going on that crazy train. So what do you do to have less stress? Focus on real assets. I'm not talking about digital currencies or Bitcoins, right? Those are not real assets. We're talking about things that actually hold value, tangible assets like real estate, tangible things like that, where you can actually not just grow your money, but you can actually create passive income right now. That's the key. You want passive income right now. Okay, so let me give you an example. Like I've had several clients that they got their money in the market, they realize it's just not doing enough for them. They're like, well, what do I do? How do I create more with it? Well, we start looking at other assets. We look at things like rental real estate, not the stuff you buy in your backyard. We look at turnkey rentals where you don't even have to manage the property. You don't have to find the property. You don't have to be this amazing real estate expert to do it. Somebody else helps you find the property. You know exactly how much money you're gonna make before you buy it. You go and get financing on it if you need financing, and then they property manage it for you and you're hands off. And guess what? Money comes in passively. So we have them do things like that. We have them invest in things called syndications, where you put your money and pool your money together with other people to buy a partnership in like an apartment building, for example, or self-storage units, or even how about oil and gas land? If we're gonna have rising gas prices, how do we make money off of that? How do we make money off inflation? Things like those kind of things you can actually make money from. There's also things you can invest in businesses as well, although businesses can be more speculative and there's not as real assets. But again, there can be some element of control depending on the kind of business that you're investing into. You can go into partnerships. You can lend money. Do you know you can be like the bank? You can actually lend money to people and get paid a return. I have one person right now, one of our vetted contacts in our network, that actually will pay you 5% for every 4 months that you lend them money. That means 15% a year you could be making on that money. So we have one client right now where they had a lot of money in stocks. In fact, they had it in individual stocks like Google and Facebook and things like that. And they were riding that wave, but they knew they had zero financial freedom. Despite having $5 million in stocks, zero financial freedom. So what do we do? One, we help them refinance and get their expenses a little bit lower. So we actually saved them $4,000 a month on expenses. That was an easy one to go right off the bat. And then two, we started getting them investing in real estate-based real assets that are actually generating passive income. Well, guess what? If they actually fully pull their money out, they're still pulling money out of the market. They're still keeping a little bit in stocks. But if they decide to pull all that money out and invest it, they could be generating over $600,000 a year of passive income from what they're able to do. Guys, that's how you create passive income right now. And that's how you don't have stress. That's how you know money's coming in each and every month, taking care of your bills. Now, if you thought this one's good, next, people always wonder, what happens if I'm gonna run out of money in retirement? Well, I'm gonna teach you how to never run out of money in retirement. Check out that video now.